Hello, Warriors. Dale here at TradeGATEHub.com, sponsored by TradeView Markets. So the biggest number, at least the biggest number of the week, is tomorrow, the CPI. Market has been getting a lot of good inflation news. We'll see if that continues. When I left you Wednesday, I still felt that there was more downside. I said sell a rally, and Euro back to 108.50. It didn't get there. But I also said sell a rally in cable back to 22. High was 21.94, close enough for government work. So I still think at least 117 is viable. Maybe it happens right after the CPI if it's not good. If the S&P, if the CPI is benign, I would still sell rallies here and sell rallies here, because I think the 105 level is viable. If the Dixie is your cup of tea, you can see how on this pullback we held the 102 level. So it's possible that we could come back here and test the 102 level on a benign number, or we can just go. And if we just go, I'm looking for 106. I still consider this to be a bear market rally in the dollar. But playing it, again, the February break, part of that was a strong dollar. The other forecast that really is coming home in spades has been yields. So we talked about this Wednesday, and this is where yields were after the Powell discussion, and it held that breakout, which I showed you, looked like a little head and shoulders right here at 356. And from the lows, that's 24. 380 is a target. And something I want to show you that I noticed from one of my associates today is that when you look at a trend line on the 10-year, we've broken trend. So let's just take the high here. And this is pretty important because, up until the employment report, the market was pretty sanguine about yields, that they had peaked and they were going to keep heading lower. Fed was going to pause, and the next move was going to be lower later in the year in yields. Well, looks like a breakout to me. And as long as we're holding the 355, why isn't there the potential for new highs in the 10-year down the road? Okay, and I don't think the market is positioned for that. Okay, and I want to talk about the metals, which the break forecasted. I have a continuation move happening here in gold, down another 8. I believe halfway back, it's about 1,800 or so. I have some confluence at 1,780. So it still looks like it was right to be patient, to wait for this pullback. This is important. A spot to accumulate, especially if you book things in here like I did and then miss the last wave. I did not miss anything in silver. In fact, silver, I'm going to start right around this 21 level, scale all the way to 20, and be wrong under 18. Gold silver ratio is, stalling a little bit at this target 84.5, but doesn't mean this is the top. Some short-term indicators, are they diverging? Yeah, it's getting a little divergence in there on the XAU gold silver ratio. Maybe that's a third drive. So plan to remain patient for this. And really the key that I'm going to be keying minor share buys, and I'm not buying GDX. I have other issues that I'm interested in. So here's the GDX, and I was talking about between 28 and 26 last week. That's continuing lower. Still think patience is the right thing. Could happen in a hurry, though. So when it gets to the number, at least put something on. You don't have to go all in at retracements in case it turns out to be a 61.8% retracement. Could take it down to, 26.65 if you start at 27.5. So don't fire all your bullets at once. Ease into the position, but I do think that this is a very important buying opportunity, that we're going to have some type of fib extension of the run that we had from the bottom. So, I mean, that's 22, that's 11. So we could go to 44, 70. We could get a 17-point run off the GDX for the next wave if it's a wave 3. I like some other issues like BTG is coming into a pie zone. I also like this Orla. It's a nice looking stock too, really holding up well. Let's see what that does at 370. But when you look at First Majestic, it really never got going. Here's your daily. And look how much we've retraced in AG. Much more than the SILJ ETF. That's held up better. So I don't know if AG is part of the composite of it, but are we going to, try and stop out all the longs here in First Majestic before we get a turn? It's so deep right now, I wouldn't rule it out. It's about 80 cents away. If silver breaks $1, I'll be interested to see where AG is when silver's trading 21.10 or so. These look like this looks better. See how far away we are from the lows. This is Endeavor silver. I think it's a pure silver play. But, we could still trade 280. I didn't do the fibs on it. And this was really the star last year. Actually doubled from 2 to 420. And I have some confluence here, halfway back and 61.8, under $3. I'm buying this one because the next move could be 320. 1.618 of 2 is 320. And I think I covered everything. All TLT for people that are, interested in what the longer end of the market is doing. We had a pretty important development. I think it was Thursday or Friday. It was on this candle, and we had a 30-year auction. The bid to cover was not good. And Rick Santelli on CNBC gave this a D-. So, I don't know if the bond market's going to change a D- to a B+. You just, fill in the D with a line and then make the minus a plus. I'm sure there's some people out there listening that may have done that on their report card when they used to have to bring their report cards home to their parents. So anyway, it looks pretty vulnerable. We'll see if it, I'm thinking that it doesn't make new lows. Maybe it goes to 96, but I still think that could be somewhat of a shock for the market. S&P's held Friday, had a little reversal day after, struggling up at 4,200. I would need closes over 41.25. I would actually sell a rally here and be wrong over 42, should the number be benign. But there's something that I mentioned over 2 weeks ago. In fact, at the bottom, when the VIX was trading 17, it was this low, and it was this day that I started buying June VIX calls. And, some pretty good technical action has occurred since then. I don't care how you draw your trend line or how thick of a pencil you use, but to me, this is looking more like we broke trend and that we're headed at least to this 25 level. That's going to be important. See here, look left. The market's memory is to the left. And I would just like to wrap it with everything that's maybe something that's happening in the news. And I invite our team too. This invitation goes out to everyone at TradeView Markets and our followers here on YouTube and all the guys posting great charts in the room. And I'd like to know, would you like to ride in a beautiful balloon way up in the sky in a beautiful balloon? What's with all these balloons anyway? Guys, trade your charts and don't look up at the balloons. Stay focused. Tomorrow's going to be a big day. Mike's going to be with you in an hour and 40 minutes. And you really need to do yourself a favor and spend the CPI in the main trading room with a few of our contributors, but watch what Mike posts. He's going to be flying tomorrow. So that's what I see. Those are my calls. And the next one is yours. TradeGATEHub.com is our number. Don't just count your pips, count your blessings. See everyone tomorrow.